Good day traders, welcome to this week's video. My name is John Jacobs for RMDTRADER, and this week we will take a small break from our typical market lineup to focus a little bit on education and to introduce you to our newly developed 5-phase trend evaluation method. This is a 2-part series, so please remember to subscribe to our channel to be reminded as soon as part 2 of this video is released. That's it for the formalities, so let's get charting. So today we will be looking at trends. We'll be discussing very briefly what they are and how they can be identified and how we can use them to trade. So as most of you know, a trend is typically where we see a price, or rather let's just say a stock or a forex pair move in a specific direction for quite a while before eventually turning around and moving in a new direction. So how that is typically identified or mentioned or usually described is via impulse and correction waves, and that typically just means we have a move to the downside, a correction move, another move lower in the terms of a downtrend, a correction move and a move lower, etc. Same with an uptrend, we have an impulse move, correction move, impulse move, correction move, and we see that happening until the trend eventually consolidates and then reverses. Now, a lot of traders use things called moving averages, as I'm sure all of you are aware of, and a very obvious and very popular moving average to identify trends is this one I have in red. This is the 200 SMA, the 200 simple moving average, and typically when price is trading below the 200 moving average, we are typically in a downtrend, and when price is trading above a 200 moving average, we are in an uptrend. Now, a lot of traders use that as a bias, meaning you'll only be looking for short positions below a 200 MA and long positions above a 200 MA, and we are doing that, of course, to increase our odds. But what we will be discussing today is just a way to more accurately identify trends and trend direction changes, and also how to best position yourself to trade within these different market phases, and also how to uniquely identify these market phases. And in order to do this, we will be using the EURUSD as our demo forex pair for today, as the EURUSD is the most popular and most traded forex pair in the world, and we will be doing a chart study over the last couple of years to see how this method that we will be showing you can be used to uniquely identify these trend phases. So what I'm going to do is I'm just going to start off by showing you the 5 trend phases that we will be identifying, and what we will be calling our 5-phase trend evaluation method. And this is a method that we will now teach you and that you can use and apply in the markets to identify the different phases and when you can be expecting a market to change direction and move into a new trend. So looking at the EURUSD and looking at our first market phase called initiation, what we are looking for is we are looking for a break below the 200 moving average. But that is not enough. What we also will be looking for is a break in market structure. So market structure can be anything from support and resistance, be that diagonal or horizontal. So in this case, we can see that we do have support at this level that I've indicated with this red line. And as soon as we have a break of that, let's say that structure, market structure, we are entering our confirmation phase. Now, in the confirmation phase, what we will typically be seeing is we'll be seeing a move lower below the market phase that we now saw a break from. And from this phase, we will typically start expecting the market to pull back and retest one of the moving averages. As soon as that happens, we will then enter what we call our third phase. And in the third phase, we call it the breakout and retest phase. That is where we expect the market to continue making lower lows in the downtrend and lower highs, and continue doing that all the way as the trend is maturing and progressing. So we can see how the market is breaking out lower, pulling back, retesting, in this case, the 100 moving average, moving lower, coming back, retesting the 100 moving average, moving lower, coming back, retesting the 100 moving average. At some point, what we notice is that we have a little bit in a slightly deeper pullback, and at this point we are testing the 200 moving average, where previously we were only able to test the 100 moving average. So what this signifies is the next phase of our trend called our maturation phase of the trend. And in the maturation phase, we are now consistently expecting deeper pullbacks. So you can see our price is once again moving lower, but then pulling back deeper to the 200 moving average in this instance once again. What we are now looking for is a new change in trend direction, and there is a few things that we will be looking for. Firstly, you'll see that we have our 50 SMA in this instance now crossing above our 100 moving average, and price trading well above the 200 moving average before again breaking lower. But at some point there will be a major shift in the market, and we can see in this example we have price breaking very strongly above the 200 moving average, and at this stage also no longer making lower highs, but instead making a much higher high. And in fact, this is the second time this has now happened. You can see over here we also have made just a minor higher high, but now we have made a significantly higher high, breaking the market structure. And at this stage, we are entering the exhaustion stage. Now, we can see that price did retreat lower, continuing this downtrend, but the market is now in exhaustion phase. And at this point, we are looking for a failure, and we are looking for the market to revert. Now, typically, this is where we'll be looking for classical charting patterns like the double bottoms, triple bottoms, inverted head and shoulders, and all of that. But in this case, what we'll be looking for is just, again, an initiation phase followed by a confirmation. So we have in this instance our break above the 200 moving average, but what we have, what that is slightly different to previously, is we now also have our confirmation, and with our confirmation we now have the 200 moving average moving in between the 50 and the 100 moving average. So that is a very important distinction. And if I go back to our bearish trend, the start to that bearish trend, we'll see the same thing. So before we had that initiation and that confirmation, we had that 200 moving average move in between the 50 and the 100 moving average. So that is very important to see that happening, and that along with the break of the market structure. So in this instance, we can see we have price breaking above the 200 moving average. We now are forming a new market structure. You can see this is the area that we have over there. You can see that's a very clear area of resistance, and the market is now breaking that, along with the fact that we have our 200 moving average in between our 50 and 100 moving averages. So at this stage we have our market break, meaning we have entered and moved through our confirmation phase, and we are now once again in our breakout and retest phase. So what we're expecting is the market to break out and of course come back to retest. So in this instance we see the market having a strong breakout and then a very consolidation type move, where it is retesting the 100 moving average. And what is happening now is we have the market breaking higher. Again, we are breaking market structure, and at this stage we are now moving into the maturation phase. And the reason for that is typically where we had previously in our downtrend moved from the breakout and retest phase to the maturation phase after we broken above the 200, where we previously only were able to test the 100. Now in this instance, where we were only able to test the 50 previously, we have now tested the 100. So there's a shift in the market momentum. Now once we're in the maturation phase, we are once again looking for deeper pullbacks. Now we expect moves as deep as the 100 moving average, as that is the precedent that has been set. And we can see that now we are expecting the market to at some point move into the exhaustion phase. And some indications for that would firstly, of course, be a price breaking below its previous pullback level, which was the 100 previously. Now we are pulling it back much deeper, and also what we are noticing is a break of that 50 SMA below the 100 MA, which we also saw here in the end for this market, where we had our 50 SMA breaking above the 100 MA. So So at this point we are now entering into our exhaustion phase, and this is the phase where we would be looking for price to eventually reverse by once again looking at the initiation phase. And just looking at this example, this is the current live example for the EURUSD, and we can just quickly see if we can draw that. So we have an initiation phase where we have price now breaking below the 200 moving average, and you can see I'm trying to see if we can find some market structure. So there's a purplish line rather that we can see as part of the market structure, and it does appear at this stage somewhere between that diagonal and that horizontal line in magenta that the price is now breaking below market structure, and we have also now had that sweet spot. So that's where the 200 is in between the 50 and the 100. So in that instance, that means we had our initiation phase, and now we have also had our confirmation phase. That means the next phase we are looking for is our breakout and retest. This means that for the next phase of the market, and I'll just draw our new block here, we're expecting the market to move lower, come back and do a retest. So at some stage we are expecting this market to bounce back and retest at least the 50 or the 100 moving averages. That concludes part 1 of this video. We really hope you learned something new today, and that you would hopefully be already able to apply some of this lessons in the markets to do your own analysis and to see if you can spot some new emerging trends like that on the EURUSD. As you know, we love to hear from you, so please visit our website www.rmdtrader.com and shoot us a message with your feedback or questions. Until next time, trade smart and trade successful.